Welcome to Moneyman. This is our feature called Long Story Short, where we cut through long stories, complicated data, confusing narratives to present a short, actionable brief. Normally we do it on a sector or an asset class, but today I'm going to talk about the question that is really troubling all retail investors. How will their portfolio perform in financial year 2026-27? Let's dive in. See, March 2026, this is just a very short summary on March 2026, is truly for the history books. FI sold record amounts on the back of the US-Iran war. This has never happened. Look at the data of the last so many years. And not only that, the infographic on the right side is more important, more critical. 2026 March, it belongs to a very select few years which have really seen terrible markets. Look at these bunch of dots. This is how the month of March usually comes together, and this is data of the last 27 years. And look at these outliers. The years would surprise you. We have the year 2000, we have the year 2001, we have the year 2008, we have the year 2020, and we have the year 2026. What are we looking at? We are looking at the monthly returns in March on one axis vis-a-vis the number of big down days. Now I define big down days as those days when Nifty 500, the broader markets, are down by 1.25% or more. Why is this important? Because that shows incessant selling in the markets and continuous hammering. And look at these 5 names, these 5 tags. All of them have been extremely terrible years. 2001 dot-com bubble, 2008 the global financial crisis, 2020 COVID, and 2026 nothing as big except for the US-Iran war. Of course, that jeopardized the entire oil logistics, and that is why we saw a lot of this happen. But one should remember that 2026 is one truly for the history books. But what 2026 has done is robbed everyone away of their patience, increased frustration, and has just left investors with no hope. And rightly so. Look at this. As of March 31st, the percentage of stocks away from their 52-week highs were extremely low. This shows extremely bad market health. The stocks very far away from their 52-week highs were very high. See, these are stocks which are more than 40% from 52-week high. That's almost half the market was around there. And look at the one on the right. How stocks moved. This is the returns dispersion or returns distribution for different kind of stocks in the month of March. We have everything bunched towards these intervals which are below 0 to 5%, 5 to 10, 10 to 15, etc. And the most important point is the purple ones, which denote small cap. Those were the highest number of stocks that fell in the month of March. Now you understand why March was an extremely tough month. March 2026, that is, was an extremely tough month, and why this has increased frustration amongst investors. People have started believing that these markets will never go up. But now we are in April, and April always brings something entirely new. April is a month which over different time periods, over average 5 years, average 15 years, and average 25 years, has proven to be one of the best months. And rightly so, right? A lot of new positions get built up. In April, the financial year in India gets over, which is a unique thing which belongs only to India. And usually March is known to be a month of market bottoms. A lot of markets have bottomed out in, a lot of bear markets have bottomed out in March. So April usually brings a lot of great positive seasonality, and we are in that particular month. But you know what? Investors are not willing to believe that this April will be any different. So let's dive a little bit deeper into this. This is the results classification for last quarter, Q3 FY 2026, and I'm looking only at PAT growth. What I've done is I've taken the top 500 stocks, that is Nifty 500, right? And I'm just trying to figure out where are those pockets where there is great PAT growth that is happening. And I've further segregated them into small caps, mid caps, Nifty Next 50 and Nifty 50 stocks. Now see, a lot of greens, that is Nifty 50 are concentrated around the less than 0% or 0 to 10%. They're slow, they are steady. But those are large caps, they will always be slow. The surprise that comes in is from a lot of small caps and a lot of mid caps, which have shown more than 50% increase in PAT growth. And look at that, a quarter of these stocks, a quarter of small caps and a quarter of mid caps have shown that kind of growth in PAT in the last financial year, in the last quarter. This is extremely important because see, this quarter, while it may be a quarter of improved profitability, revenue growth overall has definitely hit 11 quarter high. On an overall basis, profits have rebounded, but there is a clear shift in the earnings concentration. Nifty 50 profits, that is large caps, they have rebounded, they are slow and steady, but the broader market is where there is great growth. Mid caps and small caps are really rocking today, and that is something that we should not miss out on. Again, why is this important? Because most of the retail portfolios, and when I say retail, honestly, if you look at any portfolio that is even below a few crores of rupees, that is also concentrated in mid caps and small caps only. And this is a phenomenon that has happened after the year 2020. So most of the retail portfolios are focused on mid caps and small caps, and that is why they've taken a huge beating. And that is exactly where we are seeing huge PAT growth estimate beats happening. Extremely important to remember this. Small cap valuations have moderated. I'm specifically talking about small caps because this one particular segment determines how your portfolio will move. So there's no point in you tracking Nifty 50 honestly. Small cap is where the real growth in portfolios will happen for you. Look at the forward price to earnings or price to book. They both have moderated, and where have they come down to? They've come down to this middle line, which is the average, which is the long-term average in both the cases. Now, this is a great place for huge buying to come in. And see, this is what happens always in the markets. Valuations get extended, they come back. Once again, that will happen. If there is any crisis, then they could go down. But it looks like this crisis has more or less been contained. So, with valuations also coming to their long-term averages, with the domestic institutions being flush with funds. Last month we saw 32,000 crores worth of SIPs. That is a lifetime high. DIIs or mutual funds, domestic mutual funds are truly flush with funds. So this is a great buying opportunity that the market is throwing. Of course, not on an overall basis, selectively. Now, even foreign houses, this is from Morgan Stanley, they are also predicting that going forward, the predicted 2-year forward earnings growth, they are predicting it to start ticking up. Look at this. And where does this report go? It is consumed by foreign institutional investors, right? So I'm really hoping that they are reading this. Nevertheless, the point is all estimates show that fundamentally Indian corporate growth, PAT growth has started ticking up, and profitability will start increasing. But I'm not one to only look at fundamentals. I always look at technicals also. So I'm going to present the most important chart in this entire presentation. This will tell you what is going to be the small cap performance outlook for the financial year 2026-27. Now, mind you, this is the small cap index. This is a ratio chart of small caps to the overall markets, the broader markets, that is Nifty 500. I always look at overall, ratio charts because it tells me which segments are looking good and which segments are not. I'm going to point out a few things. This was a 2018 outperformance peak. This was a December 2024 outperformance peak, but it was intermediate. COVID low. This was a March 2023 low, which was extremely critical for the markets, and it ushered in a huge bull run. A couple of other lows. June 2024 election low. 4 June 2024, everyone should remember that date when the markets really thought that Modi will not come back into power. And April 2025 low, which is the intermediate low. That was also critical, and markets went up but a little bit. Now, this black line that you see here is a key moving average. Not getting too much into technicals. When these bars are above this black line, it's good. When they're below, it is bad. That is why you will see, and blue bars are good, pink bars are bad. That is negative. Now, there was a rising trend line support and a horizontal major trend line support. Both were intersecting here. There was a great confluence, and I posted this on my WhatsApp channel earlier also. That this is what I was actually tracking through and through for the last 3 months from February onwards. Honestly, I was expecting markets to bottom out in February. This is the bar for February. It did not happen because war broke out, but even then, these supports did not break down, and small caps relatively performed better than the overall markets. This was for the month of March, and then this for the month of April. And see, this is slowly inching above the key moving average. You would have already seen in the last few days that small caps and mid caps a bit also, but small caps primarily have started really going up and really sustaining. Even in the last 2-3 days, when there was some bad news coming in, when the Islamabad talks failed, small caps did not come down, while the large caps did come down a bit. What does this tell us? Once we see this going up a little bit more, we will see small caps starting to perform really well. And this green line is the huge base above which small caps will start outperforming the overall markets in a very, very big way. That is, they will truly start leading. So I'm expecting this to start going up here a little bit. There will be a little bit moderations, but eventually this should start breaking out. And all of this I'm expecting to happen within this financial year itself. This has a direct impact on your portfolio and everyone else's portfolio that you know, because most of, like I said before, most of retail portfolios are weighted heavily towards small caps. So at a time when all hope has been lost, at a time when people have completely forgotten about the markets and they would rather shut down their market tracker app, this is a time when markets have actually turned around and it looks like they've started their journey upwards. There is much more to come. It will of course not be in a straight line up, it never is, but I'm expecting this to happen. Now, the most important point in this entire presentation is that most of the stocks that were leading in the earlier times will not be the future leaders. New bull markets always bring in new leaders in the market, and this particular bull run, once it really gathers steam, will be led by a completely new set of stocks. I'm already noticing that. The last couple of months, that's what I've been doing, making a list of all these stocks which are potential leaders. And it clearly looks like these names are completely different from what you have seen earlier, or in all probability what people own. So that is something that you have to keep in mind. But otherwise, portfolios which are well aligned with the market leaders will see huge outperformance. As it is, when markets lag for about 18 months, the next year to year and a half are great. And this is the time to capture this alpha that the market is offering. This is a time for money to be minted. I hope you take advantage of that. This is what we do. This is a little bit about us. This is what I've done my entire life. Basically, investing is in my DNA. That's all I've done, honestly. And now I help a lot of working professionals to create wealth from the markets. If you're not part of our WhatsApp channel, it's a free WhatsApp channel where I share a lot of relevant insights on a real-time basis whenever things are happening, and a lot of calls on the market. You can be a part of that. All you need to do is just scan this code and be a part of it. I hope this was of help to you, and I hope you take advantage of this period in the markets. You've already suffered through the bad times. I really hope that you mint a lot of money in the new times to come. The new financial year offers great opportunities. And what better day to talk about this than today, which is March 14th, which is Spring Festival all across the country. So wishing you best wishes for this festival as well. Have a wonderful time. Thank you for your time.